Hi, I'm Marian Bennett. I'm here with Rick Southern, who is a reverse mortgage specialist. Rick's going to talk to us about the massive changes that have been occurring in the reverse mortgage industry over the last few years that I believe most people do not understand. This product has had a bad reputation for a long time. I was one of those that also felt it was not a great product. So when I learned a little bit more about this product, I felt it was important to share that information with you and with the world, because there's a great opportunity here to have another avenue for a legacy, for a retirement income, for protection of assets. And it's time for the world to know that reverse mortgages have changed in a big way. So I'm really glad to welcome a reputable reverse mortgage specialist here to talk with us.
Thank you very much. That's a beautiful introduction. Reverse mortgages are a product whose time has come. And with the aging of the population, and especially in this area where housing prices are very high, most people, when they retire, a large portion of their wealth is tied up in their home. So they have to figure out a way to move that wealth from their home to a way that they can use to live off of.
I'd like to ask first about, what's sort of the elephant in the room, which is they've had a bad reputation for a very long time, and a number of people have gotten hurt by them over the years. So what's changed, or what can you tell the audience that can help really alleviate some of that concern?
Sure. No, I understand. So in 2009, we had a financial meltdown. And prior to that, there was a whole different financial marketplace for every kind of mortgage. And the government then came in and cleaned things up a lot. So specifically with reverse mortgages, there have been major changes almost every year since 2009. Probably the biggest change is that a borrower has to go through mandatory counseling before a loan application can be taken. So a neutral party that's not affiliated with the mortgage company in any way evaluates the borrower to make sure that they understand the product, and they also see the proposal that's been made to the borrower so they can determine if it's actually appropriate for the borrower. The counseling takes about an hour or an hour and a half, and if the borrower passes that, then they get a certificate that says they're now eligible to do a loan application. That's the first thing. Secondly, after 2009, there was a problem that reverse mortgages could be very expensive. So fees are now capped. Also, it used to be that as long as you had good credit, or credit wasn't an issue, as long as you had good equity and were over 62, you could get a reverse mortgage. Now you, as of April 2015, have to go through a very rigorous financial assessment, which is actually more rigorous than a normal mortgage application. And what the government is trying to do, most reverse mortgages are a product that's insured by the FHA. And the government, if they're going to...
FHA, just say FHA for
Federal Housing Authority.
Okay, just for the consumers that are watching.
The Federal Housing Authority. The insurance is such that the loan will stay with the borrower as long as they're in the house, or as long as they live in the house. And so if that home should be underwater 40 years, let's say the borrower lives another 50 years, to be 115, then it could be that the house is underwater. The estate will never have to make up the difference. That's part of what the insurance is.
And when you say insurance, is that mortgage insurance?
It's mortgage insurance.
The mortgage
yeah,
insurance.
there's a little piece of mortgage insurance that's paid every month.
So that's part of the
loan
fee,
yeah,
part of the loan.
Part of the loan. And the purpose is to make sure that if the company that does the loan goes out of business, the borrower still has everything that they've been entitled to when they took the reverse mortgage out, and so that the estate is never underwater on the loan when the borrower passes away. If they sell the house and there's not enough to pay the loan off, the insurance takes care of that.
Okay.
So the government is trying to make sure that the reverse mortgage program is sound, and that's the purpose of having more regulation and a more rigorous assessment of the borrower.
Okay.
So they don't want any borrower to get in and do a loan if the borrower can't afford to make insurance payments, property tax payments, the things that would, end up with the house.
It's not open to anyone anymore.
No, it's not.
So, okay.
Yeah.
So if mom and dad want to leave a legacy
Mm-hmm.
to their children,
Mm-hmm.
how is that addressed if
Mm-hmm.
the reverse mortgage is in place?
Right. So that's a really good question, because one of the most common questions that I get is, well, I want to leave something to my kids.
Right.
And I think people really have to think about how to view a reverse mortgage.
Well, we have to clearly change their thinking.
Mm-hmm.
I mean, including mine.
Right. So most people, when they retire, they have X amount of wealth. They have this basket that's made up of house equity, some cash, and maybe some stocks.
Right.
Something like that. So maybe that's worth $1 million.
Okay.
They're going to deplete that one way or the other. So a reverse mortgage just gives them another option as to what component is going to be depleted to help them live out the rest of their life.
So they don't have to give up their stocks
Exactly.
and other assets in order to tap into the reverse mortgage.
Right. So they can conserve
The cash.
the cash. If it costs them $50,000 a year to live, let's say, and they have $1 million net worth, if they pull $50,000 each year out of their cash, pretty soon they have no more cash.
That's
They pull
right.
it out of their stocks, pretty soon they have no more stocks.
Right.
So if you're left with just equity in a house, that can't put food on the table.
Right.
So what this does for, and a lot of people in this area, because equity value is so high relative to the other aspects of somebody's net worth, it kind of helps balance that out so that they can take what they need to live out of the whole pool instead of just the cash end or the stocks end.
So my in-laws did go through reverse mortgage a few years ago, and they needed it in order to have, be able to maintain the home that they were in.
Right.
And it greatly helped them do that.
Right.
There was no legacy though.
Right.
So that was hard for them.
But if you think, that I understand, because everybody wants to leave something to their kids if they can. If they didn't have the ability to take it out of their home, they probably would have depleted everything else, had to sell their home and rent somewhere, and the money would have been gone anyway.
Mm-hmm.
So a reverse mortgage doesn't eliminate the legacy. It just redistributes how the wealth that somebody can use to live off of.
That's a really good point. And I think if at this point, if people are going into considering that I think you had mentioned this to me earlier, that they have their team around them, a trusted advisor, a state attorney, CPA, or someone like that. So right off the top, what's a risk? What would be the risk to a couple or anybody having a reverse mortgage?
I think that you have to be judicious about how you use the funds that become available to you. And in a small percentage of cases, if somebody all of a sudden has this newfound wealth and wants to go to town, that's one of the risks.
So the product doesn't have limits on how much
Good
money
question.
can be.
Yes, it does. That was a very good question. And one of the safeguards that the government put in after 2009 is they limit, I think this was in 2013, if you're eligible, whatever you're eligible for, they limit you to 60% of that amount in the first year, in most cases, so that you can't take everything at once.
Okay, 60% of the eligible amount.
Yeah, 60% of the eligible amount.
What I do and what you do are really the same thing. We educate our clients.
Right.
We have different products, but we want to help them make the best life decisions.
Right.
And there's a lot at stake. So when you talk about some of the benefits of reverse mortgage, you had just mentioned about a line of credit.
Right.
So in a nutshell, can you, I mean, I know it's probably a lot more, to talk about than this time we have, but can you just give us in a nutshell why that's a benefit?
Sure.
And at what age is that a benefit?
Sure. So you can take your reverse mortgage 3 ways, or a combination of. One is a lump sum payment, which a lot of people do to retire an existing mortgage that they have, and that helps their cash flow. One is an income stream, and one is as a credit line. The difference between a bank credit line and a reverse mortgage credit line is with a bank credit line, you have a fixed amount that you can borrow from, up to, and that works for about 10 years. And at the end of 10 years, the line is closed, and you have to pay it off over the next 15 years. With a reverse mortgage, you start out with a limit. A person that's 62 would start out with a limit of about $330. You don't have to borrow against it. And the line actually grows each year. And so if you start
the line, meaning the
line
available
limit,
credit.
The available credit grows each year. And so if you start out at $330,000 and you keep, say, zero balance on it, at the end of 10 years, that'll be, depending on what interest rates are doing, but ballpark $580,000 available to you. So you get a line at 62, at 72, you have almost $600,000 available to you. Another 10 years, be approximately $900,000 available.
Say when
to
that
you.
person's 82.
Yeah, when they're 82. Okay. And maybe that's when they need it. Maybe that's when they need the in-house care. Mm-hmm. Maybe that's when they've run out of funds in their cash account, their stock account. All of a sudden now they have almost $1 million that they can that will allow them, sustain them through hopefully the rest of their life in the house. So that's with a credit line, you can do some really smart forward planning when you're 62 or 63, regardless of whether you need it or not at that point.
And that's separate from the cash assets.
You mean that they've already got in their account?
Yes, that they already have in their accounts. Yeah. That's separate from that.
Sure.
Okay.
A lot of older people, for example, don't want a 2-story house, or the kids are gone. They want a smaller place, 1 story. So if you sell and move into a new house, you can use the equity from the sale of your old house as a down payment and put a reverse mortgage on at the same time to pay for the rest of the cost of the house. And you'll be able to live out your life in your house and never have a mortgage payment. And the money that you preserved from the sale of your house, the equity that you preserved, can go into your stock cash portfolio to help you with your needs as you live out your life. So this is really directed at people that would like to downsize or to real estate agents. Okay. One thing people don't understand about reverse mortgages is that they can also be used to purchase a house. So someone that is thinking about downsizing, selling their house, getting into a new house, and doesn't want a mortgage can take some of the equity from the house that they sell, use it as a down payment, put a reverse mortgage on for the rest of the cost of the house, and never have a mortgage payment as long as they live in the house.
So if they're downsizing, the reverse mortgage goes on to the house that they're buying?
Correct.
Okay.
Correct.
Interesting.
And we don't really have one in this area, but some of these big senior communities that might have 300-400 houses, if you pulled up county records on them, you might find, I don't know, half of them, quarter of them, having reverse mortgages on them.
Well, it's interesting that you bring that up because there are many times where I will be speaking with a prospective buyer who is downsizing. Mm-hmm. And they will say, this is my last house. Mm-hmm. This is the house that I'm going to die in. So they have already planned that that's the house that's going to be their final home.
Mm-hmm. So if you did that, you would free up some assets for your financial advisor to be able to manage, to help you as you live out your rest of your life in your house.
Great.
I'm thinking about maybe the last 4 or 5 loans that I did. Each situation was completely different, but the most important factor on each one was a person in Carmel Valley who had about $50,000 left. He was 76, really nice house, and he had a pension, but his $50,000 would be gone in a year, and he'd have to sell his house. So putting a reverse mortgage on paid off his first mortgage, so that improved his cash flow and gave him an equity line that he could pull a couple $1,000s from each month to make up his
monthly
his cash flow deficit, and he can stay there the rest of his life. Another one was a gardener who was 75, and he was inflow outflow pretty similar, just a little bit negative, but he had to keep working in order to make the ends meet. And so the reverse mortgage paid off his mortgage, so now he was net positive, and it gave him some money in the bank, and it gave him an income and allowed him to stop gardening for a living. So that was a big deal. And then with a lot of seniors, and this is somebody in Half Moon Bay, reasonably nice house, but many times older people don't have the money to fix their house up.
That's right.
And so
or maintain it.
A lot of deferred maintenance on the house. When the contractor, so I had a contractor come through and look through the house, because you have to fix it up a little bit before you can do an appraisal, especially with an FHA.
Because of the FHA. That's right.
He stepped right through the deck. And so, that was dangerous.
Yeah.
And so really important for a lot of seniors, that enables them to put the house in a much more livable condition.
So I just have to ask, so where did he get the funds to fix the things that were required?
I fronted the money for her.
You fronted the money,
Yeah,
okay.
I
Yeah,
loaned-
because
I-
it
I
had
fronted the
to
money.
come from somewhere.
In her situation, this particular situation, she only had $5,000.
Yeah.
And oftentimes you hear reverse mortgages are very expensive. That's one of
That's
the
right. I
knocks
think
on them.
that's one of the things that we have
Yeah.
heard over the years.
Well, there is flexibility, and depending on how the loan is structured, and depending on how much money they need up front and some other things. In her situation, I actually paid all of her closing costs. So I fronted her $1,700 to fix the house up so that the appraisal would be okay, and the dangerous situation was eliminated, and we paid all her closing costs. And so
Don't know if you really want everybody knowing this.
well, I'm just, it's not for everybody.
No, you're right.
No promises out there, but there is flexibility with a lot of the loans. If you ask any person, at least that I've dealt with, that's done a reverse mortgage, and you say, what's the biggest difference in your life now? Most of them will say, I now have financial peace of mind. One guy actually said, you saved my heart. He said, I used to wake up every night. This was a guy in Carmel Valley, and he said, I used to wake up every night with my heart beating wildly, like a panic attack, and I couldn't get back to sleep. And he said, now I never have that problem, because you've taken a great burden off my shoulders, and I have financial peace of mind. And that's really what it's all about, is figuring out a way to get it structured and put in place so somebody doesn't have to worry about what's going to happen over the next 10, 20 years.
We're at the age group where we know people that are thinking about reverse mortgages, and I saw you over there really, asking some good questions and really, taking this all in. So what was the biggest eye-opener for you?
Well, this has been enlightening on a number of fronts. The biggest thing was thinking back to the story that Rick talked about, where he had the client who was having palpitations at night, and I thought, metaphorically or literally, the equity that was in the house that he could have been tapping into earlier was held hostage under his mattress, and he just didn't have access to it. And so it occurs to me that this could be a much needed and powerful tool for controlling, for another degree of freedom in controlling your estate planning, so that this huge, for many people, it's their biggest investment, this huge amount of equity in the house is now accessible, so that you can differently manage your retirement funds that are in place elsewhere. So really quite dramatic in terms of enlightenment for me.
Yeah, and you made an interesting point in regards to the financial advisor that Rick had mentioned, that a number of times referrals come from financial advisors, and in our own meetings with financial advisors, it's like a second thought.
It comes up as a reference, and the two words come out, reverse mortgage, and it's easy to encapsulate things you might have had as biases before and then dismiss. But I think they're being tossed out as a phrase to avoid what could be a half hour or an hour long conversation, which could make all the difference in the planning decisions you're going to make. So I come away from this particular session with a really different opinion.
I'm thrilled that we have the opportunity to learn a little bit more about reverse mortgages today, and that you're able to watch this, because parents are aging, we're staying healthier longer, and these products have changed over the years, and we still have a lot more to go. And I think having a professional that can clearly explain these products to us in a way that makes sense, not only for us, but for our parents, the adult children involved, will go a long way in preserving legacy and providing peace of mind to families.